Ratios, the analysis. All right, so ratios are a big deal, especially in finance and making financial management decisions. Most of the time, what you're going to be doing is comparing a bunch of ratios. Let's see how we did this period against last period. What do we expect to do next period? What's our competition doing? It's not always, but it's mostly going to come down to a bunch of ratios. So I decided that it'd be wise, at least on my part, to make a video that helps you understand ratios and helps you, and well, in anticipation for how I'm going to start explaining a bunch of ratios, trying to make it very simple for you, I thought it'd be wise for me to at least go over a video that just breaks down the different ways of you calculating ratios, right? So the first thing I want to say about ratios, we'll take an example. So profit margin, this is a favorite of professors, all right? A favorite of business owners. It's going to be one of our favorite when we go into business together, because you realize that I like making money. So net income is money we get to put in our pocket. Sales is just money we collect from customers, right? And if we want to know the percentage of money we get to put in our pocket out of all the money we collect, we're going to look at our profit margin. But why make a video that says the different ways we can look at ratios? Wouldn't it just be all the same thing? Well, yes, they would tell you the same story, but you'd be surprised. We say ratios a lot, but we end up looking at a lot of decimals and a lot of percentages. Quick example, right? So let's take, again, the profit margin equation. Let's just really quickly say that our company, net income. So on the income statement, we're going to look at the bottom line, which you hear a lot in movies. What's the bottom line? All right, the bottom line is going to be the amount of money we're able to put in our pocket. So we collect a bunch of money, we pay our expenses, we pay to run the show, and whatever's left over, we get to put in our pocket, right? That's the net income. Let's say our net income is $50,000, right? But how much did we actually collect? That's what I could say is going to be our top line. All right. Usually in the income statement, it would be on the very top, and sales will say it's $100,000. We're going to keep the numbers very simple, and that's something you'll find that I do a lot with the ratios, just to help us out and to help me out, especially because I can't just say, oh, well, I don't want to confuse you. No, I don't want to confuse myself. All right. I want to be able to just, kind of have this off the cuff conversation with you, so you realize that business is not so difficult. I want you to be able to clearly understand what we're talking about without stressing out, without losing a bunch of hairs if you're not bald already, okay? And by the way, I'm actually looking forward to being bald. Weird fact about me. All right, so let's do some calculations here. 50,000 over 100,000, all right? So again, don't panic right now about what the account titles say. We're just trying to look at how to understand ratios, right? So if we simplified, we'll take out 4 zeros on top, 4 zeros on the bottom. We have to balance, and we'll say that this is 1, this is 2. So how many different ways can we have this answer? Really quickly, we can say it's 1 over 2, right? That's the fraction form. Or we can say it's 0.5. That's the decimal form. I will be focusing on the ratio form. You know why? Because it's easier for us to have a conversation about what's going on while we look at ratios. So what this is telling me is that 1 to 2 just says for every 2 sales, for every $2 I'm able to collect, we only get to put $1 in our pocket, which that's not bad. I'd live with that, because trust me, there's some companies that run off a profit margin of 10%, which is 1 to 10. So for every $10 they collect, they have to pay $9 to other people. So you're basically collecting money to give it away and then only keep $1. All right, so that's what a 1 to 10 profit margin would say. So it's easier for us to have conversations about ratios if we keep them as ratios. But in your classrooms, you're going to boil everything down, and you're probably going to have to actually write the decimal form. Oh, and at the same time, you can have the percentage form, right? So this would really be 50%. We'll have a bunch of examples really quickly in this video, just so you see what's going on. All right, and ways for you to look at it. If you have the decimal form, you may as well just finish the job off and look at it as a percentage. So especially for profit margin, okay? People call it a ratio, but we always look at it in terms of percentage. What's the profit margin on this product? 17%. All that means, you go back to the formula, which I will help you remember. I hope. I'm crossing my fingers. I will help you remember, and you'll realize that if it's 50%, all you're saying is that my net income, the amount of money I get to put in my pocket, is 50% of all the money I collect. So let's take a look at another ratio. Let's say our current ratio, which we will go over, don't panic, let's say this is 1 to 4. I'm just making numbers up at this point now, right? That means for every $4 that we owe that we should pay this year, I should say, this year, we have only $1 worth of stuff that we can potentially sell and collect cash for this year. So let's look at some concrete examples here instead of just talking into air. All right, so we'll say the ratio form is what? Ratio form is 1 to 4. Just making up numbers. I want you to understand, get a feel for what's going on, all right? So numerators on top, denominators on the bottom, start getting familiar. So ratio, this is what I'm going to focus on. It's going to say 1 to 4. And if we're talking about this ratio, we just know, we would kind of read backwards here. We'd say for every $4 value that is owed this year, we have $1 that we could potentially sell. And now I say potentially sell because a lot of current assets we actually don't plan on liquidating. This is one of those ratios that kind of has an emergency feel to it. It's not relying on your operations. It's kind of saying, hey, do you have enough to cover your obligations just in case? But we'll talk about stuff like that later, okay? So ratio form right now, 1 to 4. What is the fraction form? I guess that's easiest to jump to. So fraction form would be 1 over 4. It's the exact same thing. So how can you start reading it? If you're going to keep it in fraction form, I'm always going to focus on ratio, and I apologize if it confuses. I genuinely apologize if it confuses anyone that I keep it in ratio form. All right, I believe personally that it will speak to people a lot. It's a lot more accessible to talk in ratio form. But if you'd rather fraction form, I hope you're able to keep up and translate everything to ratio form. All right, because it's pointless making these videos if you don't get it. Okay, so in fraction form, this is a quarter. All this says is that whatever's on top is a quarter of what's on the bottom. That's it. So that means for every $4 that we owe this year, we have $1 that we could potentially earn in cash if we liquidated. What does that mean in terms of one single dollar? That'd be the decimal form. If we were to really, really boil things down. So the deci here is decimal for me. That'd be 0.25, right? So 0.25. If you're gonna go decimal, you may as well just finish the job off, I always say, and go percentage. And percentage is taking that decimal and moving it 2 places to the right. So we would go bloop, bloop, and that's 25%. Fair? So again, let's forget about this ratio. This is one of my least favorite ratios. Hopefully you agree with me when we go over it. But net working capital, we'll talk about. Total assets for right now, they're just placeholders. What is this saying if we look in terms of percentage, right? That just means that if our result after calculating this ratio is 25%, we figure out the decimal value of it and then we translate it to percentage. What does that really mean? It means our net working capital that we can realize, that we will realize, I should say, is 25% of our total assets. So whatever our total assets is, we find 25% of it, and that's what our net working capital is. Sales, if the answer was 25%, whatever our sales is, we calculate 25% of it, and that would be our net income. But I'm going to work more intuitively with you and just focus on the ratio, because the ratio for me is just so easy. It's easy for me to say for every $4 that we collect from customers, we only put $1 in our pocket. I feel like there's an extra line of reasoning that comes with the fractions and the decimals and the percentages, but they're all the same thing. All right, I'm making this video just so you realize they're all the same thing. Professors, they're going to focus on decimals and percentages because you're in school and everyone knows math is, whatever you learn in math is like, I'm not going to make an excuse for why it's done this way. I just believe keeping things in ratio form is the most, it appeals to our most fundamental way of understanding business. That's what I found. All right. Fraction form, yuck. Yuck is all I could say. But look, let's just take random examples now. So if I had a ratio, right? We're going to go over a lot of them. This is just helping you understand in general what's going on. Let's say it was 2 to 27, right? That just means if we're looking at one ratio, that for every 27 of whatever's on the bottom, let's hold this up just for a reference point. Okay, so 2 to 27. For every 27 of what's on the bottom, we're going to realize 2 of what's on top. So for every $27 I collect from customers, I get to put $2 in my pocket as my net income. Okay, so ratio form is so easy for me. You kind of work backwards. All right, for every boom boom corresponding, I get boom boom corresponding. Okay, and then some people are going to keep it in fraction form. So let's say 1 over 5 for some random ratio. Use this as a reference point. That just means that my net income is a fifth, 1 over 5 of the money I collect from people, my sales. Right? It's not difficult, but me, I'd rather see it as 1, 2, 5. All right? Because then I get the point at you when we're sitting together in our meetings and you want to make a point, and I go, no, but we collected $5. All right, I want to put $2 in my pocket. And it's easy for you to kind of visualize, and you sort of see, all right, it's not as balanced as we may want it to be. It's a little lopsided. Maybe we can boost our profitability here a little bit. Ratios it's just easy for me to work with, okay? And then let's take random decimals. All right, so your professors, or in real life especially, the numbers are gonna get really, really yucky. You're gonna get something like 0.734, whatever, right? And fine, you may not be able to actually have a ratio that you can easily translate to, okay? I mean, you can. I don't want to be picky about it. Actually, I'm not going to go over that. But let's say, for simplicity's sake, you're looking at 0.734. I would say take it the extra step, move 2 decimal places to the right. That's 73.4%. And all that means is that whatever's on top is 73.4% of what's on the bottom. That's it. And we're going to talk about these things. Okay? 73.4% profit margin is, that's a dream. That's what I want for us. Okay? But focus, okay? This is just talking about ratios, the analysis. They're going to give us a bunch of clues. Ratios are clues. We're going to be Sherlock Holmes of our company. We're going to be looking at a bunch of financial statements, the factual story that our accountants have been able to put together. And now we have to make decisions. We have to push the company forward. And how are we going to do that? We're going to look at a bunch of ratios. Okay? So please understand that I'm going to rely on the ratio form of things. All right? Numbers get messy and they look like decimal form. If they're decimals, you might as well go 2 decimals to the right and turn them into percentages so it makes more sense to you. Fraction form, look, whatever you're looking at, if it's, again, let's look at current ratio, and we have 1 over 7. Okay, I would rather just say 1 to 7, but if you just get a ratio, you just have to remember that your current assets, stuff that's on top in this case, is just 1/7 of what's on the bottom. That's really it. Okay? But telling ourselves a story, it's so much easier when we focus on the ratio side of things. All right, guys, please actually understand what's going on here, because if you do, then I'm going to get silly about a bunch of ratios, and you're going to understand what's going on, and you're going to look back on all your textbooks and go, why did I think this was so difficult? It's not. All right, so the first step really for us is understanding how to read ratios. And I really, really do hope that a lot of you get it. All right, it's a crucial step.